4 years back, why would anyone buy something in 10 minutes? Now that's the way to go.
There is a need for a Zepto-like model. Right? I won't plan, right? I want everything in 5 minutes. At scale, it will catch up. The J curve will eventually kind of like give that operating leverage and profitability will come. All these models have a very unique place in the country with very diverse need of customer segments.
8 years back, would a technology or a new economy company be listed on the stock market was something people would just backdoor laugh about.
One thing I try to resist is not to kind of like fall too much in love with the businesses that we are evaluating. Luckily here I haven't yet got that
Not that bug yet.
such smart founders.
The energy these founders have is very infectious.
The lost in translation moment is very critical. Like what you tell can be interpreted in a very different way.
A lot of founders and operators become investors, and after a few years a lot of investors want to go out and become founders. Like grass is always green on the other side.
Problem statement is very, very clear. And how do we solve that?
Hey Saravanan, welcome to an episode of Lunchbreak with Lightspeed. Thank you so much for taking out time. Usually we do it with a lot of our founders, a lot of our executives. I thought maybe we'll do it a bit differently this time. Have two investors talk about how we are seeing the landscape evolve, bunch of good things that happen in India on the investing side, of course, and the ecosystem, and of course a lot of things are work in progress. So thanks again for taking our time.
Thanks Ajay for having me here. We have done a lot of interesting stuff together and doing things together. Looking forward to have this session.
So Saravanan, would be very helpful, just broad intro, why you're doing what you're doing, how did you get into investing, what are you looking at Premji Invest?
Yeah, so it's been probably over a couple of decades since I kind of like started my professional career. Today, I kind of like largely look at financial services and fintech investments at Premji Invest. But historically, I have done across sectors. Earlier, Avatar, I used to work for Apollo's India vehicle, Aeon Capital. There again, a lot more sector agnostic investments. Over the period of time, I've been part of interesting companies in the industrial space and consumer space. But my first love has always been financial services and fintech. And that journey kind of like started with my first investment in one of GE vehicles in India called GE Capital. Now it is called Clicks Capital. More than about 12 years back, we kind of like started that journey. Somehow that piece always kind of like excited me to explore how this whole financial services will evolve to meet the capital requirements or other services requirement for larger masses. So that has been always very dear to my heart. And the fintech revolution happened in 2017-18. I kind of like again picked up and that is the time I actually moved to Premji Invest. Again, I dabbled across different sectors and eventually about 4 years back I took over financial services as my core focus and interest area. Since then, it has been a lot more interesting journey.
Yes.
I really like, the power of technology and how it can kind of like transform anything, whether it is industrials or consumer or financial services. It plays a significant role in taking these models to a larger mass with the least friction, right? That theme has been kind of like dear to my heart, right? I'm a hardcore technologist. I started my career with GE, by the way. I have spent hours in R&D lab. At some point of time, the whole commercialization bug bit me and I kind of like switched into investment role. Of course, the business degree and other things helped me. And since then, I've been into investments and actively in areas where technology can play a major role. Originally renewable energy and new generation investment technology related stuff. And subsequently, as I kind of like took different sector shifts from industrials to consumer to now financial services, that has played a central theme across the board. And today I kind of continue to do the same thing and we are doing one together.
Yes, which is in tech. No, I had a similar journey. I started my life as consumer and pharma and now doing a lot of other sectors across technology, more generalist. But Saravanan, this puts me to an interesting point, right? If you go back in time and see, we've been doing this for a long time, both of us. The way India investing started, right? It was always one single sector, like IT was a big thing. If I go back even further, BPOs was the first big thing, then pharma came in, then financial services came in. Now it's a lot about these new and sexy names, technology companies, you call them new economy, someone calls them technology. What's your view on how this India landscape has evolved? Where do you think things have gone very, very right? Where do you think things have not gone right but are still work in progress?
No, it's a interesting topic, right? Can talk about this topic for days. One thing again as a trend that I'm kind of like seeing here is that the risk capital that we kind of like have today dearly missing about 15-20 years back, right? And well established and reasonable successful models were backed. Of course, at that time, the interest costs and other things were also high, and commensurate to those risks, whatever private equity and venture capital guys could kind of like make money with manageable risk and well-established models. So those are the ones that used to receive capital about 2 decades back, right? And those models are all in a fairly established kind of like sectors, right? When the VC money first came into India itself in early 2000, those are the sectors that used to kind of like get money, whether it is VC money or other form of proprietary or family office money, give or take. Those are the sectors that kind of like attracted, right? It could be certain areas in industrials, it could be hospitals, or it could be IT, BBO. Those are the sectors that kind of like continue to attract capital. And by sheer experience, when people saw that they were able to make money sitting in India with liquidity and other things still very, very nascent earlier, the other sectors have kind of like started attracting capital also. And a little bit of I would say a policy and a conducive regulatory environment also started attracting capital in other sectors, right? So financial services has seen significant kind of a boom, and Indian consumption story is the biggest probably story that will run for another few decades as well, right? And those are the themes that now that has kind of like started getting traction with many of the VC funds and the PE funds, and that is kind of like here to stay, right? And more such kind of a conducive policies or structural arrangements that can be created for enabling attracting this capital, it will see kind of like more growth. That is what at least in my read.
You say it right, like if you think about multi-stage investments, right? Like I think there are 3 different forms. There is venture capital, there is growth minority, and then there is private equity or private equity buyout. All 3 are very different, and there are different forms of learnings. Like venture is very risk on, growth minority is somewhere in the middle, private equity is a very late stage thing. But like you work at a multi-stage investment fund, we are a multi-stage investment fund. Do you see multi-stage being the right way to go about it? Do you see these becoming more and more nuanced, or do you see these becoming more and more broader, where a single company you could invest across stages, or something could start, like for example Weaver, the platform we are building together, some would say it's venture risk, right? Because there is nothing and we're building it from scratch. We'll talk about it later. But then we are acquiring 2 assets and suddenly it becomes late stage. So how do you think of the multi-stage paradigm of how India investing is evolving?
No, it is fantastically evolving. I would take the example of Premji Invest itself, right? We started way back in 2008, right? At that time, the mandate was very, very limited to XYZ growth capital with certain check size in certain sectors, right? From that $100 million corpus in 2008-9 to today, roughly about $16 billion across India and the US private and public market. The kind of exposure that we have started taking by geographically, by stage, by sector has dramatically widened, right? At each 5-year block, things have kind of like evolved, right? Earlier we are known as growth equity partner who kind of like typically puts in $25-30 million. That growth check size itself has now increased to $70-80 million, right? And then we kind of like took our buyout bet in 2017-18, right? With buying a chemical company about 90% and a packaging company, and properly we are kind of like doing a buyout shop job, right? Sitting in a more multi-stage kind of a fund structure. For that you have to add talents, right? Because you can't own a company without knowing how to run, or you have to have a management. Exactly, you need to have a full-fledged operating team to run that company, right? Whether it's in chemical or packaging or in toy manufacturing, you've taken like a different bets there, right? So I think while you are wearing that buyout hat, you need to have a different talent pool. While you are wearing a growth hat, you have to have a different talent pool. Historically, we have been more in a traditional company where the risk of failure is relatively low. Then we started taking more technology bet when we started looking at say a Policy Bazaar in 2013, or Lenskart or some of these kind of technology first kind of companies, right? It has certain evolution journey, but it was new, right? And probably timing matters, right? They started also at the right time, and we also transitioned at the right time, and hence those kind of bets were kind of like enabled within our multi-stage kind of a fund structure. And lastly, now we have started looking at, as one of the things that you mentioned, right, the co-creation kind of a model where we do not just as a sole buyout, but partner with the like-minded funds who are long gestation, multi-stage, and see things with the technology first approach, right? So that partnership and through that bringing in right management team and building out an interesting platform with a small anchor assets, right? So I think even in our own journey, things have evolved in that manner, and I'm not very surprised that market also is kind of like picking up a very, very similar trend. We are a reflection of market, or vice versa, right? So it is the same. From our own experience, I see that trend kind of like coming in, partly because market enables some of these things also. Right? One of the reasons why we thought about this affordable housing finance platform also, exactly, it is a design of market, how the different scaled assets are available and ripe for consolidation and ripe for using technology to bring the scale and operating leverage, right? And this couldn't have been probably possible 10 years back, and similarly a Lenskart wouldn't have been possible in early 2000, right? So everything happens at time, and India is evolving, and we have to evolve our strategies across stages to enable them.
As you speak about market evolution, right, one thing that struck a chord with me, like I remember 5, 7, 8 years back when I started looking at a lot of technology companies, a lot of them were loss making, which they still are today, because they have a J curve to it. They are going kind of against the tide. Like 4 years back, why would anyone buy something in 10 minutes? Now that's the way to go, and you are seeing not just quick commerce, but you are seeing quick service come into multiple things. So if you look at markets, right, like 5, 7, 8 years back, would a technology or a new economy company be listed on the stock market was something people would just backdoor laugh about. That's never going to happen. That, like, I've heard comments like that's not even a business. But now today when you talk about it, and which is a great thing, we have a lot more technology companies that go public. They operate publicly while even if they are investing into the business, and then they have their own J curves and phenomenal success. Policy is one. So a lot of that dynamic I think in India is changing, right? Like, so this is a tough topic of growth versus profitability. Are these businesses structurally high quality or not? What is your take on that?
I think you articulated well, right? Today there is a need for a Zepto-like model, right? I won't plan, right? I want everything in 5 minutes. When I suddenly decide that I want plan, that need probably did not exist 10 years back, or definitely 20 years back. And when the need evolves, right, naturally people kind of like build a product or a company to address those needs, right? Naturally, when you are solving that, in the near term there will be a burn, there will be a loss-making models, right? But if there's a fundamental unit economics that kind of like works for that kind of a model to exist to serve those customers at scale, it will catch up. The J curve will eventually kind of like give that operating leverage, and profitability will come. As long as such kind of a conviction exists in the model, be it Policybazaar, when we actually created a case, no one believed that direct to customer insurance sale will cross probably 1,000 crores GWP in the best of the best outcomes, right? But it has kind of like surpassed everyone's expectation way beyond, right? And it hit the tipping point and the J curve happened. And similarly, the example of Zomato and Zepto, I think all these models have a very unique place in the country with very diverse need of customer segments. If using technology, if we service these customer segments well, and with the unit level economics that will show path to profitability, I think the public market is also opening up to such models, right? Earlier, if you don't have PAT, I don't even know what you are, right? So why should you list, right? So all those kind of questions will come, but people now are applying the long-term view and see if there is a value being created, and such companies are getting very warm reception. Honestly, 10 years back, such market never existed.
Maybe switching gears, like as investors, you kind of almost on a daily basis, you don't know what may happen tomorrow, or even like sometimes in 4 hours I may be looking at a consumer company, 3 hours later I'm looking at a financial services company, 1.5 hours later something on portfolio side we have to look at or give an opinion on or be involved in. Like, what's the biggest myth that you've kind of seen about how good or how bad the investor life is? Like, the one funny thing I've seen, and this is something, I was at one of the events few days back and something had said, after a point, a lot of founders and operators become investors. And after a few years, a lot of investors want to go out and become founders. Like grass is always green on the other side. So like how do you think of your life? You've been doing this fairly long.
So in the last at least 15 odd years, right, I have changed job twice. I started off with a renewable energy focused fund and then joined Apollo Aeon, and then I changed to Premji Invest. At each point of time I had that 6 months window where I kind of like really dabbled, should I start something, right? Because as an investor, one thing I try to resist is not to kind of like fall too much in love with the businesses that we are evaluating. It can kind of create a confirmation bias, right? And I'm victim to some extent, right? When I was in the renewable energy fund, I was like, I loved the unit level economics of solar power plants. I thought that I have some reasonable money, I can raise third party capital, I'll set up a solar project, it will generate interesting cash for me. And I said like, this is what really I want to do, or is there something, maybe I have some time. Then I joined Apollo and Aeon, and we kind of like did of course different sector investments, and one of them is my favorite, financial services. And when we acquired the GE Capital, and now it is called as Clicks Capital, I really loved the power of technology at that point of time. Still it was very nascent. Genuinely had an amazing business plan to start a fintech company, right? And then I thought maybe not now, right? I have kind of another 8-10 years of investment experience to gain before I kind of like start running the company. And then I joined Premji Invest. Luckily here I haven't yet got that
not that bug yet.
entrepreneurial, but I agree, right? To a large extent, the grass is green on the other side. When you particularly gel and spend most of your time day in and day out with the passionate founders, hearing their business ideas, that you tend to put your shoes into them and see, what is their life. That kind of like is the biggest thrill that I kind of like see in the investment role that I am kind of playing. But at the same time, whether it is the model or whether it is a founder, right? You should know where exactly, you can play a meaningful role, right? As long as that balance is there, I see that the grass is green on the other side syndrome will be kind of like reasonably there. I'm not ruling it out. At some point of time there could be some interesting idea that will come up, but I guess it is a part and parcel of our job. We meet such smart founders, naturally you get smitten by some interesting.
No, you're right. The energy these founders have is very infectious. Like whenever I meet Adit at Zepto, Harshit at Razorpay, Gaurav at UB, even founders that are not in a portfolio, right? Like Lalit at Grow and a few others. These guys just want to change the world, and they work 24/7, 365 for years on end, and they'll move the earth to kind of, make their will happen. And of course, consumers and a lot of us benefit at the end of the day. What's your funniest lost in translation moment as an investor? Like for example, I'll tell you one. Mine is one, and I've been guilty of that. Is investors walk into the room, especially when it's growth and late stage investors, maybe even venture for that matter, is walk into the room, talk to a founder, and give the founder gyan on TAM, especially on the company, on the sector the founder is running. So that, like, for me is a very funny lost in translation moment. I've been guilty of that, and I try to avoid it as much as possible. But any anecdotes that like that come to mind?
Mine is a little interesting and little awkward, but I guess it drives some interesting point home, at least to me, right? Very early days, probably I was in the mid stage of my career, right? We were trying to do a growth investment in a company, and we spent like a whole bunch of time. It's a very traditional family run company, first time trying to interact with the private equity and raise capital, right? So we went, sat with them for the whole day and try to, in a way bordering on what you said, trying to explain
the founder about their sector,
their business, and how others are running and how we can run, and all those gyan. I was kind of like talking to them, and then towards that one inflection point I made one kind of a statement. I think we should bring in a lot more professionals into the company and see how they kind of like take the company from 10x to 100x, right? It was a little bit of an innocuous statement made by me, and probably that promoter thought that, oh, maybe like I'm not ready to take that company from 10x to 100x. So what I can do to kind of, he was very gentleman, right? So he was kind of like asking very subtly and innocently, I think private equities think that this kind of a growth cannot happen in a particular manner. You tell me what I should do. Then I took back my statement. Oh my God, I should have been a lot more careful, right? These are all fantastic promoters who have reimagined the journey and built the company, or built India to a large extent, to what it is today. Sitting with them and working closely with them, and wherever we can do our own way of institutionalization in terms of bringing in professional and giving them a safe landing in the existing setup and help them grow, help organization grow is a massive skill, right? It happened over 10 years back, but even now when I reflect on this particular topic, right, the lost in translation moment is very critical, right? What you tell can be interpreted in a very different way, but you know, the promoter was very nice in terms of like article. That's the biggest learning experience that I had in terms of talking to particularly, you know, whether it is old age founder, old age promoters or a new age founders. It's very important to kind of like, you know, create a sync with them in terms of what is their thought process and what are we kind of like trying to say. It again, you know, I have this entrepreneur hat sometimes I wear, right? I kind of keep that aside when I kind of like go into any founder's room. But since then, that learning has kind of like dramatically changed the way that I kind of like interact with promoters across old age and new age, and that actually is you know, the best way for the Indian PEs and VCs to kind of like build value, working closely and together with whether it is established promoters or you know, the management team which is trying to set up something new, reimagining the journey that has kind of like happened over the last few years or so in India.
You know, that's actually the biggest thing I have unlearned, or at least I thought I learned, and that was a wrong learning, and I unlearned that. Is in my early career days, mid or early career days, I used to think investors create a lot of value in the companies we invest in, whatever shape and form you invest, whether it's growth, venture, minority, buyout, doesn't matter. But I used to think, and then I started over a period of time realizing actually the founders and the CEOs and the executives are the driver, you are just the passenger, right? You have to play the role of the passenger. And the value creation happens in that manner. It has to be very collaborative. These guys know what they are doing. They are actually taking 500% of the risk, and then hence they are delivering 500% of the value. You just obviously add more to it, either with opinions, with advice, with the platforms which all our funds build. But yeah, these are the guys who kind
very
of
interesting
drive the
you know, analogy that you gave, right? We are all passengers. Only some you know, have a 10-year horizon, some will have like 15 years horizon, and some will have like 5-year horizon. But we as a funds typically get in and get out. In that process, whatever value that we add to the company and to the founders is what is kind of like valued a lot, right? As a fund, Premji and Lightspeed both have a longer horizon, but still we have a horizon, right?
Yes.
So in that process, whatever we can kind of like create value for the company, depending on the stage that we get in, can deliver substantial return to the company and all the stakeholders and us. That is how I'm kind of like started thinking right now.
No, so moving on to this, like we are, I think, co-passengers now in what we are co-creating together under the guidance of Satra and Anil in Weaver Housing Finance. So for you, how did that come about? Like I would love to learn. I know we've been at it for almost entirety of this year to build this platform, hire the team, look at the M&A assets, and various other things that go on to building this. How did this platform co-creation idea first come to you guys? Like what did you guys see in the gap in the sector or the need of this platform? Like how did that happen?
It kind of like evolved over a period of time, right? So as you kind of see today, we have lending exposures of different size, form and sectors, right? Today, in Aditya Birla Capital, TVS Credit, Credit B, Mintify, Shubham, right? So these are all different aspects of you know, lending, whether it is housing finance or whether it is personal loan lending, supply chain financing, diversified with a strong focus on two-wheeler and commercial vehicle, right? All these things have kind of like taught a fundamental DNA about you know, what a lending means, and where again my original passion of technology can play a differentiated role in the lending space, right? This you know, the Weaver Housing itself is a synthesis of you know 2-3 themes that we kind of like started following, right? Despite all the you know lending companies that are kind of like evolved over a period of time, the you know, you take a little cliched metrics like credit to GDP ratio or sheer under-penetration of credit and access to capital issues that you see in tier 2, 3, 4 towns, they still have unmet capital need, right? As everyone's dream to own home or whatever different scale and size today, you know, at a certain scale we call affordable housing is still there. And if you kind of start addressing some of these segments by opening 100 branch, 200 branch, 500 branches, inefficiencies are there in the system, and then eventually all these costs inefficiencies get transferred to the customers and they pay you know higher yield for this. So this problem statement is very, very clear, right? And how do we solve that, right? And that is kind of like is a one way of thinking about it, right? While we have taken different forms and size and shapes of investment bets, I think here we thought it will be appropriate if we go to one founder and understand if they have a vision of building a technology first affordable housing finance platform, and see if we can join hands and partner with him in enabling that kind of a model. And in this case we were very clear that this is a capital hungry business, and a long term value creation is what we are kind of like trying to build, right? And you need a capital for and the holding and patience for 10 to 12 years to build out these platform and create a normal liquidity event for all of us that would want for, right? And so that is how we kind of like started thinking about a clear problem statement that there is a demand and there is a crying demand for this affordable housing requirements of 70% of the population to be met, using technology to efficiently address them so that the cost will be manageable. B, can be done only with the right partners in hand, efficient management team, and two investors who can join hands and guide the company with capital, wisdom, whether it is technology and financial services experience that you and I bring into picture, and a longer gestation period for them to have a breathing space and execute, right? That is how this whole kind of like idea came up, and Satra coming from HDFC world, and Anil coming from a very deep financial services operating experience, became like an icing in the cake for us to kind of like lap onto. And the kind of people and advisory board from KK and others who are involved in this organization also gave us a lot more confidence to go behind and build another HDFC for 2040, right? It has been, and sometimes since an institution has not kind of like been created in this space, right? So all these things are the building blocks or ingredients to kind of like this idea, right? And when we met first, right, in one of the panel discussions, right, I briefly bounced upon with you in this idea, like, is that something which you would kind of like look at it? And it was from that kind of a spark of a discussion to today becoming a joint partner and co-passenger in this long housing finance technology first kind of journey. We have kind of like come, I wouldn't say long way, we have come we have covered a significant distance and a lot more distance to kind of like cover to make this as a very successful platform. One thing that I would add, there are 120 licenses of affordable housing finance companies in India. You would know that, right? And what is that that others are not doing that we will kind of like do, right? There are only 5-6 who have achieved scale out of them, right? The market is also ripe for a reasonable consolidation, right? Not that you'll buy 10 or 20, a reasonable consolidation to get certain scale and actually use it as a GenAI first anchor platform, right? Because the power of generative AI is just kind of like started. If the management is committed and the support system between you and us are empowering them to use that to efficiently take that efficiently take the financial services and access to credit to the last mile, I think sky is the limit, right? And this platform with that capital and the team and all the adequate support that is required to be GenAI ready coming together, we strongly believe that it has immense potential to build a institution that I just mentioned about for 20-40 years. So
no, I totally agree with you, right? Even when we were doing our work and we've been actually thinking about how do we play as multi-stage long-term investors, very technology first in our head, how do we play financial services and lending in India? Of course, there are a lot of fintech models like UB, Razorpay, and a few others, right? But when you look at traditional lending, we've been thinking about what is the role of technology that comes in. And you said, right, one thing you said, struck a chord is there like 100, 120 licenses. But if you still look at the housing journey, the process of going through, it's very old, but it's still very archaic, right? It still has to go through physical documentations and processes, which I understand because it's a house, you have to verify it, it's a big loan ticket item. Right, but then we started thinking about, if you look at our lives, how technology has changed over the last 2 decades. You can order stuff in 10 minutes. You can place stock market order within seconds. You can get a personal loan within minutes or seconds. You can get a home service within minutes or seconds. Housing is one thing which you can't, and I'm not saying you should get it within minutes and seconds, but it's still weeks. So I think that was the biggest turning point for us, is why has technology not change the way a home loan was given over the last 15-10 years? What has changed is how verification or how ITR verification, for example, gets done, or how KYC gets done. But that's all we've seen in housing. But every other form of financial services, to your point, we saw technology completely change the process. So I think when we spoke about it, the sinking of minds, what you had, what Anil said to me, I remember in one of the meetings, Anil had said, why can't someone come to a branch and have just one conversation, that whole conversation gets recorded, and the AI and some technology, whether it's a machine learning model or so, work on that in evaluating the customer versus his financial track record. I think that idea, is a dream, but I'm very hopeful that in the next few years to come, we can make that a reality. So I'm very, very hopeful that this turns out to be very, very interesting. And like you mentioned, one interesting thing you mentioned is investors have a horizon. Investors will obviously create liquidity events. We are seeing a lot of that happening, right? It's the talk of the town. Technology IPOs, new economy IPOs, and I think at the start of the conversation we're talking about 15 years ago, no one would imagine companies like this, which in my opinion are A+ phenomenal companies, go public. What's your view on that market today? Do you think we've overdone it? Do you think a lot more will happen? Is it frothy? Is it not frothy? How do you think of the IPO market or the overall market in general? M&A is picking up in India. 10 years ago, these M&As were not happening. So how do you think of that part of investing, as we speak about exits and the next phase of these companies becoming larger and larger and finding their way either to a stock exchange or to a M&A?
No, I think the public market is becoming deeper, and 10-15 years back, IPO was not a default exit, and today it is kind of like becoming a reality in many of the situations. And some of the new business model, whether it is analysts or public market, are warming up to, right? And they are kind of like understanding how the path to profitability may not be immediate, but as long as some of the green shoots are kind of like visible, people are kind of like betting on these companies, and they also have shown profitability in the process, and confidence is kind of like building, right? So that is a very, very positive development, right? And my sense is that in another 10 years it will only kind of like increase, right? And with many the tech first kind of companies turning more profitable and validating some of the investment bets taken by the early backers, right? There would be further deepening of the public market is what kind of like I see. But in some models, there will be consolidation because for a 21st player in the public market, right? Why there has to be an entry? There has to be a clear differentiation for business models to kind of like attract public market capital at a good valuation, right? When the the uniqueness starts kind of like reducing, that is when more M&As or more consolidation driven liquidity and exit events will happen, right? And in our mind as a fund, we kind of like are cognizant to kind of like see we are factors of market, right? We can't create market, and we are all kind of like players in the market, and we have to serve what market wants, right? Whether it is IPO or whether it is M&A, mentally we have to be kind of like tuned to enable that. And if we had by design as well as by all the efforts have generated a best-in-class company, we are in a position to access public market, right? If it is a little lower notch, M&As and other kind of like options are still available, and naturally that will become a reasonably big liquidity option in future as well, right? And the acquisition that we are doing in housing finance itself is an exit for someone, right? And we are enabling that, and with all the plans that we have with building a technology first company for future, naturally our metrics will be far more superior to go and access an IPO. Is a journey that we are enabling, right, in some sense.
That is hoping to enable.
Right, that is a kind of a liquidity option that will further strengthen in future also for some of the players who are not the top decile or a top quartile kind of a companies, but that liquidity option should kind of like always be available as the market becomes wider and deeper.
No, awesome. Thank you so much, Saravanan. It's time to wrap up. Thanks again, Saravanan, for taking our time for doing this short conversation with me.
No, it was absolute pleasure talking, and some of the anecdotes and some of the interesting analogies that you shared during the conversation resonates a lot with how I think and how as a firm we think. It was excellent talking. Thank you so much for having me.